The global financial market is the largest, most liquid, and most brutal arena on the planet. Every single day, over $7 trillion move across borders, across time zones, across continents, dwarfing the entire global stock market combined. There's no central exchange, no closing bell. The game never stops. From the city of London to Wall Street to Tokyo, trading flows 24 hours a day, 5 days a week, feeding an endless appetite for speculation, profit, and control. At first glance, it seems like a land of infinite opportunity, a borderless marketplace where anyone from any corner of the world can play. But the very scale that makes this market look so democratic is what turns it into a predator's paradise. You're not trading in a fair market. You're stepping into an ocean where the sharks already know you're bleeding. So, who's really pulling the strings? Behind the charts, indicators, and technical patterns lie colossal institutions, central banks with unlimited liquidity, hedge funds managing billions, and global financial firms equipped with armies of analysts and tools that retail traders can't even dream of. These are the true market movers, the ones who create trends, fake breakouts, and hunt for liquidity like apex predators. With access to top-tier data, algorithmic trading systems, and high-frequency execution, they can generate false price movements, manipulate sentiment, and sweep away millions in retail stop losses within seconds. Retail traders, by contrast, make up a mere 5 to 6% of total market volume. That's right. The vast majority of trades come from institutional powerhouses. That makes small players incredibly vulnerable, not just to volatility, but to manipulation, misinformation, and outright predation. And that's where the trap is laid. It's easy to get in. Platforms are sleek, accounts are free, and brokers entice you with leverage ratios as high as 1 to 1,000. Make money from your phone. Turn $100 into $10,000. The dream is sold on every corner of the internet, but reality bites hard. Without real understanding of risk, proper strategies, or mastery of your emotions, the same leverage that promises wealth becomes a weapon against you. FOMO, greed, overconfidence, these emotional landmines explode daily in the portfolios of new traders. And the result? Between 70 and 90% of retail traders lose money in their first year. Some lose everything in their first few weeks. Not because they weren't smart, but because they were playing a game they didn't even understand had rules, let alone that those rules were written by the sharks. But the system goes deeper than that. There is a mechanism, a cold, calculated engine that's designed to make the small traders lose again and again. It starts with stop hunting, a brutal, highly effective tactic used by institutional players. They know exactly where retail traders place their stop losses. Why? Because human behavior is predictable. A textbook setup appears on the chart. Traders place stops just below the support. The big players load up on volume, push price a few pips below that level, trigger a cascade of retail stop-outs, and then reverse the market in the original direction without them. It's a psychological massacre. You were right about the direction, but you got kicked out of the game before it even started. Then come the news events, the non-farm payrolls, interest rate announcements, GDP releases. The calendar is full of them. Retail traders wait for these moments, hoping for clarity. But by the time the news hits your screen, the institutions have already acted. They had the data early, or they read the sentiment faster. And worse, they use the news not to react, but to manipulate. Expect bullish? The market tanks. Expect bearish? It pumps. Welcome to the world where information is not used to inform decisions. It's used to trap the uninformed. And if that weren't enough, there's the broker layer, the so-called middlemen. Not all, but many brokers operate under the market maker model. That means they are not just facilitating your trades, they are on the other side of them. Your loss is their gain. They can widen spreads at key moments. They can delay your order execution just enough to ruin your entry. And if you start winning too often, they may quietly restrict your account, raise margin requirements, or slip your orders. You are not only trading against the market, you are often trading against the house. This isn't paranoia, it's the architecture of the system. The ancient strategists knew this game well. Sun Tzu once wrote, "Appear weak when you are strong, and strong when you are weak." All warfare is based on deception. What happens in the financial markets today is nothing but economic warfare, fought with charts, screens, and algorithms. And you, the lone trader, are the foot soldier walking through a battlefield filled with snipers you can't see. If you want to survive, you must understand that this market is not fair. It was never built for fairness. It was built for extraction, for redistribution of capital from the impatient to the patient, from the ignorant to the informed, from the undisciplined to the relentless. This is not a playground. It's a battlefield. And the sooner you see it for what it is, the sooner you can stop being the prey and start learning how to survive. The unseen hand. Who controls the game? Behind the glow of your screen, beyond the candlesticks dancing on your charts, a hidden power moves the financial markets. You think you're trading against the crowd? No. You're trading in the shadow of giants, institutions so massive they can shift entire economies with a single position. You don't see them, but they see you. Megabanks like JP Morgan, Goldman Sachs, and Deutsche Bank aren't just participants. They are architects of the game. These institutions account for more than half of all interbank trading volume in the global financial markets. They possess financial muscle that retail traders can't even comprehend, not just in capital, but in infrastructure. High-frequency trading machines, proprietary algorithms, real-time order flow, exclusive liquidity networks. They don't wait for opportunities, they engineer them. And when you place your order, your $10,000 position, it's a drop in their ocean. You're not just outgunned, you're visible, traceable, predictable. They exploit this. It's not random when price spikes just above your stop loss and then drops. It's not coincidence when a breakout happens only to reverse the moment you enter. These are not market accidents. They are executions of design. The big players understand exactly where retail traders enter, exit, and panic. They don't just trade the market, they trade your psychology. Their tools? Price manipulation, stop hunting, liquidity vacuums, fake outs that look like breakouts, and breakdowns that lead to reversal traps. These aren't tricks. This is a systemic edge built on data, repetition, and behavioral science. Retail traders call it bad luck. The pros call it liquidity harvesting. But the banks aren't alone. Behind them stand some of the most cunning minds in the financial world. Hedge funds like Bridgewater Associates, Renaissance Technologies, and George Soros's Quantum Fund. These are not institutions that follow the market. They shape it. They build complex strategies so sophisticated, no one outside their walls understands them. Machine learning, quantitative models, predictive algorithms processing millions of variables in milliseconds. George Soros didn't guess when he broke the Bank of England in 1992. He positioned himself with surgical precision, knowing exactly how the system would respond. That's the power of deep insight and even deeper capital. Hedge funds move with stealth. When they buy, they don't chase price. They build positions slowly through dark pools and hidden orders. When they want to exit, they don't sell. They let the market rise and lure retail traders into taking the other side. Their goal isn't just to win, it's to make sure you lose. And then there are the brokers, the gatekeepers between you and the market. While many present themselves as neutral platforms, some operate as market makers. That means your trade doesn't go to the market at all. It stays in-house. They become your counterparty. Your losses are their revenue. Think about that. When the spread widens for no reason, when slippage eats away at your profits, when your winning account suddenly gets restricted, it's not a glitch. It's the game protecting its house. The dealer always wins, especially when they control the deck. In some cases, they simulate market conditions entirely, offering a virtual experience that looks like trading but feels more like gambling. And the worst part? Regulation often lags behind. In many jurisdictions, brokers operate under weak or non-existent oversight. If something goes wrong, your account gets frozen, your funds disappear, there's no safety net. You are alone. In such a battlefield, most retail traders don't even know who they're fighting. Ancient wisdom speaks loud here. Beware the enemy in the shadows. And in this world, the enemy isn't always visible, but always watching. This isn't just a market, it's a hunting ground. You're either part of the food chain or the one feeding it. As the Stoics once taught, a man's strength lies not in controlling others, but in mastering the system around him. These financial titans don't just trade with capital, they control flow, perception, and the very architecture of price. So how do you survive? You don't fight them directly. You observe. You study. You adapt. You align with the deeper rhythm of the market, not the noise. You sharpen your discipline, manage your emotions, and train your mind to see through deception. You're not here to gamble. You're here to evolve. Let this be your warning and your awakening. The market isn't fair, but it is beatable, not through brute force, but through clarity, control, and patience. Learn the rules of the invisible game, and maybe, just maybe, you'll start to see the path the predators walk. The final mask, how illusions trap the masses. The greatest trap isn't always the most dangerous looking one. It's the most attractive, the most polished, the one that promises shortcuts. In the financial world, the illusion of easy money has become a marketplace, and sadly, many are buying in. Across social media, a new breed of false prophets has emerged. Influencers, self-proclaimed experts, and slick marketers selling dreams in the form of screenshots. Posing beside rented Lamborghinis, flashing watches they don't own, and flaunting live accounts that are nothing more than demo platforms. Their message is clear: you can get rich fast if you follow me. And people do follow, by the tens of thousands. They sell courses promising secret strategies, indicators that never fail, or AI bots that trade for you while you sleep. But ask them to show consistent audited results? Silence. Ask them to trade live under scrutiny? Excuses. They're not traders, they're actors, selling fantasies to the hopeful. This isn't just unethical, it's predatory. They exploit your desire to escape the grind, your frustration with slow results, your craving for certainty in an uncertain game. And in doing so, they hijack your mindset, replacing realism with delusion. But here's the hard truth. Real trading is boring. It's discipline, repetition, studying charts, journaling trades, managing risk, surviving drawdowns, and learning through pain. There's no shortcut, there's no secret sauce, just hard-earned wisdom. The ancient Taoist said, "Those who know do not speak. Those who speak do not know." The more noise someone makes online, the more likely they're hiding behind it. True masters are often silent because they're focused on the process, not the performance. These charlatans profit off your impatience. They know you want success now. But success in trading doesn't come from copying. It comes from becoming. It's not a borrowed mindset. It's forged through failure, reflection, and refinement. The financial world doesn't care about your dreams. It only responds to your preparation. So when you follow someone blindly, you don't just risk your money, you risk your entire belief system. You outsource your thinking, your intuition, your independence. And then there are those who fall for the second layer of the illusion, thinking they've found the right guru after being burned by the first. But the game repeats. Why? Because the real issue was never the mentor. It was the mindset looking for magic. Here's what no one tells you. The game is rigged, not against the smart, but against the impulsive. The ones chasing dopamine, not data. Emotion, not edge. So the final question becomes, will you keep chasing illusions, or will you confront the raw, unfiltered truth? Because when the spotlight fades, when the course refund policy expires, when the market humbles your ego, all that remains is you, your screen, and the choices you make. And if there's one truth I've learned, it's this. The moment you stop chasing hype is the moment you start building skill. Stop scrolling, start studying, stop following noise, start following principles. This isn't just about trading. It's about reclaiming your mind from manipulation, becoming sovereign in a world full of false kings. So if this message woke something inside you, if you're tired of lies, noise, and being prey, then this is your call.